Hey guys, so what is a CPI report? What does CPI even stand for, and how is it important to you as a Forex trader? Let's dive into it. So, what is the CPI report and what does CPI stand for? Well, CPI stands for Consumer Price Index. The goal for CPI report is to attempt to measure inflation and deflation in a particular economy. All of the major economies and currencies report the inflation area numbers of their economy in an attempt to combat a growing economy or an economy that is slowing down. The CPI is what is used to measure these average changes in prices over time that consumers pay for goods and services. Now, essentially, the index attempts to quantify the aggregate price level in an economy and thus measure the purchasing power of a country's unit of currency. The weighted average of the price of goods and services that approximates an individual consumption patterns is used to calculate the CPI. So this is the Australia 2021 CPI mid-year. So if you look at the housing to the left, all the way to the right, where it talks about communication at 2%, this is comparing from their last quarter CPI report. So housing has gone up 23% from their last quarterly report. Food and non-alcoholic beverages went up 16%, and so on and so forth. So this is highly important in regards to interest rates, which can affect the Forex market and even the stock markets and the other markets around the world. But we're not going to go into this how to calculate the CPI. That's not important right now. However, I just want to let you know how this can affect your trading and how we can look into this before we start our trading day. So, why is this important to me as a Forex trader? Well, CPI is used to make changes to cash flow mechanisms such as pensions, Medicare, cost of living. And if these mechanisms are affected, this means that the currency is affected in that country. This versatility means that it affects nearly every market and person in that country. So the CPI dictates on a large scale what monetary policymakers and the federal government are going to do for our interest rates. For example, when COVID-19 hit the economies of the world, the goal for a country is that their currency and other markets do not collapse. Well, how can it collapse? Since many people are getting laid off of their jobs, this means money isn't moving as frequent as it would in a healthy economy. Therefore, the healthy governments were able to provide their citizens with financial relief so that money can continue to flow. Banks lowered their lending interest rates to practically zero, which brought in a consistency of borrowers to the lending table. Now, imagine if the interest rates stayed the same prior to the pandemic. More than average citizens would not borrow. Imagine if the country didn't provide financial aid. More than average citizens would not have money to buy, which will dip the economy drastically, right? Although the economy still dipped, if not for these aids, the economy would have crashed, which would have resulted in that country's currency becoming insignificant. And if a country's currency is insignificant, then they become the bottom of the food chain throughout the world, having them to rely on the stronger countries for aid. So, guys, every country has their own website through their government to find the CPI report. However, I like to go to forexfactory.com so that I can see a generalized way of viewing my CPI report and being able to toggle between that report and other important news that may be important and relevant to me as I'm trading. Let's go ahead and check it out. Okay, so the first thing we're going to do is go to forexfactory.com. It's going to pull up the site. And the first thing it's going to take you is to the scanner page or the summary page where you'll see a list of currencies here. And then what we want to do is look out for high impact news. So we're looking for the orange folders, which is medium impact news, and then also the red folders, which is the high impact news. Okay. Now for the CPI report, it's usually under the red or the orange. And like here, we see a CPI report, but this is for the country for New Zealand, or it affects the New Zealand dollar. So we will go to this folder here, which is under the detail tab here. We will click on it, and it's just going to give us some information as to why it's high impact and even about the CPI report. So the source for the New Zealand dollar or the New Zealand is the Statistics New Zealand. Okay, it gives us the latest release for the CPI report and how it's significant to your trading and how it can impact your trading. Okay, it will give you details there. But what we really want to look at is the measures. So it says change in the price of goods and services purchased by consumers. So when goods and services are impacted, it's going to impact the Forex market. Okay. So usually affect actual greater than forecast is good for currency. So it gives us the actual forecast, it gives us the forecast, so what they predicted, and then the previous. Okay. So for April 2021, they forecast that it will rise 0.8%. It actually did rise 0.8%, so they were dead on. And from previous, it rose 0.5%. So you can see how this will affect your interest rates and the way that currency is being traded. It gives us notes. So sometimes you may forget where it says why traders care. Traders care because consumer price accounts for a majority of overall inflation. Inflation is important for currency valuation because rising prices lead the central banks to rise interest rates out of respect of their inflation containment mandate. So this is highly important. So before you trade, this is something you want to look at. If you're in New Zealand, you want to go to their website and go to latest release. Okay. So let me go ahead and get out of that here. And then I can even go to the previous date. So let's say this was yesterday, July 14th. Okay, I'm going to look for a red or orange folder where I see CPI. I don't see it. So I can go to the day before that. I see CPI for the US dollar. If I go ahead and click the yellow folder here, now the Bureau of Labor Statistics is the source for the United States dollar for the inflations, okay? And it gives you the same information. The forecast was up 6%. They forecasted it will be up 4%, and then previous it was 8%. So you can see how it affects the housing market, the stock market, the Forex market, and your local economy, which is highly important. So even if you're trading and the trade looks good and you're wanting to buy, if you are trading during a red folder during 5:30 in the morning, as this example here, and you think it's for a buy and it happens to take a dip, you're wondering why. You know, you're looking in the past, you're trading, you're saying, okay, this is a good place to buy, but then it dips further. It's because of this. So it's highly important to look for high and medium impact news on a daily basis. So guys, when you're trading the CPI high impact or medium impact news, just know when it's green, and the CPI report has gone up. In this case, it's gone up 0.9%. That's good for the economy. So inflation has gone up, and I know it sounds weird because no one really likes inflation when you're paying more, but it's good for the currency. It's good for the economy, which means that it's a healthy economy. So if you're trading Euro USD in this case, being USD the second pair, you're wanting to trade downward. You're wanting to sell because USD is the second pair in Euro USD, which means that the US dollar is increasing. However, you don't want to just say, hey, here's CPI news. It's going up. It's good for the economy. I'm going to sell. You also want to look for euro. You also want to look for the euro to see what kind of news they have. In this case, they have something different. Okay. You want to look at it to see how it's impacted the euro before you just go and trade, because it may be something more significant than the CPI news, right? And it may go against you. So you want to look at both pairs before you trade. Now, if there is no high impact news for the euro, and then we have something like this high impact news for USD, and it's going up at 5:30 in the morning, more than likely you're going to sell, but you still want to look at other factors before you just go ahead and sell, right? Okay, so that's just a tip. That's how the CPI report can affect your trading. I can guarantee you when this report had come out, there's been some movement in that direction for the euro, for the US dollar, depending on what pair you're trading. So that's how you would trade. You want to look at the CPI report and really understand it. I like to sometimes go to the US dollar, or go here, open the folder, and then I would go to the Bureau of Labor and Statistics to see what's going on. And actually, let me back out of here. I like to go to the latest release, because it's going to tell me what happened recently that affected it, right? I like to go through this. This is June 2021. And it tells us what happened during that time frame. Why has it increased to 9%? What's going on? And then it goes to food items, energy, electricity, commodities, cars, so on and so forth. And it breaks it down, right? So, of course, most of the CPI reports are going to go up from the pandemic in 2020 because a lot of things have gone down, and it can only go up when the pandemic is starting to get better and so on and so forth. So that's pretty much what it is in a nutshell. I'm going to go ahead and give you some questions, or actually some takeaways that I think that will be important. 3 takeaways that you should gather from the CPI report and remember is this. Number 1, CPI stands for Consumer Price Index. Number 2, the CPI report shows me the inflation and deflation of the economy's goods and services in which it is compared to from the country's last quarterly report. And then finally, number 3, check forksfactory.com for red folders, which is high impact news, and orange folders, which is medium impact news, daily for CPI reports so that you can trade appropriately during the time of that news release. All right, guys, that concludes our video. Don't forget to like and subscribe. Feel free to drop a comment and let us know what kind of videos you like to see from us next. We see you in the next video. Have a good one.